So it's everything but a monetary asset, which is why I say gold is money, but silver is more. Silver is more important than gold. You could always get gold from someone. They will lease it at a price for someone, for something. You can't get silver when you need it. Silver is more than money. Silver is not a pet rock.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the market rundown, the Goldfix market rundown. It's 7:34 in the a.m. There's the front page. We will be discussing the lower right-hand post that went out this morning. UBS raises targets as silver finally, that's our editorial line, falls in line. And we'll touch on a couple of other things. Starting with the markets, 10-year yields are down 1. The dollar is 98.43, down 1. The S&P 500 is 6608, up 2. After having a rough day yesterday, the VIX is 1696, up 23. Gold is 37.51, up 2 and change. Silver is 45.13, down 3.5. That's understandable after yesterday's run. Copper is 4.66, down almost 5 cents. WTI is 65.38, down 19. Natural gas up a penny and a half, penny and three quarters. Bitcoin flat. Ethereum bounce. Palladium, platinum continuing their surge. Platinum outperforming. Specifically, palladium 12.55 up 4 after a monster day yesterday, and platinum 15.37 up 26, following through on yesterday. I guess platinum week really was platinum week. Gold, silver now below 85 and confirming that if you're bullish gold, you should be long silver. As we said, knock on wood, when it went below 90. So far, so good. And grains are mixed, with wheat the softest. All right. When silver just cracked 42 a couple days ago, UBS put out a report. And in that report, they updated their price target in silver. And they jumped it significantly, considering how conservative they've been. And they made special note. They made it a point of telling people that silver is going to fall. Their phrase doesn't fall in line at the level of gold. So they're actually calling for the gold-silver ratio to drop, and they believe that silver is going to outperform in the next leg higher. We think that's really significant, not just because it agrees with us, but because it's a sign that either central banks are not going to be buying gold as much anymore, or someone else is buying silver. Is it a central bank? Probably not. Not a Western central bank for sure. They're probably still wrapping their head around if they should buy gold or not. Is it a sovereign wealth fund in Asia? Yeah. Is it a Saudi Arabian or UAE firm that's buying SLV for the government? Yeah. Is it Russia buying it as a critical mineral? Yes. Is it the US adding it as a critical mineral? Yes. So it's everything but a monetary asset, which is why I say gold is money, but silver is more. Silver is more important than gold. You could always get gold from someone. They will lease it at a price for someone, for something. 10%, 20%, 30%. You can't get silver when you need it. Silver is more than money. All right. Silver is not a pet rock. Let me just get into the meat of the report. Because as they said it, silver was cracking 42, and now it's above 44. So excerpts. Silver has surpassed the US dollar 44 mark, marking a 14-year high, supported by a record gold price and strong investment inflows, despite a stumble in global industrial activity. Yeah. We align our silver forecast with our gold outlook now, upgraded on September 11th. That was 3,900 was their average price for 26. Now targeting $44 to $47 by mid-26. Additionally, as rate cuts progress and the industrial cycle turns up, we expect silver to outperform gold with the ratio between the two dropping further towards 80. Well, we could be getting there a little sooner than you think. With this move, we flag that silver prices could reach an all-time high, a view that supports a long position in the metal or selling its downside risk for yield enhancement. That continues in the UBS report, premium target. UBS raises targets as silver finally falls in line, which was just sent out this morning. So the final comment about that is, well, I don't know if I should say that. I should say this, but UBS, when gold started to move, was one of the only bullion banks consistently conservatively friendly. And that's because back in the day, UBS had business that bought precious metals. They weren't producer operators. They also had buyers of the metal, and they were very responsible in raising their targets. Always slightly ahead, almost never chasing, but never getting euphoric. And they were showing caution all the time. And about $14 ago, they started saying, we're starting to like silver. And we suggest if you've got a lot of money and you understand the risk, selling put spreads, meaning you don't mind taking delivery if you lose money. And we noted that, and we made subscribers aware of that. And over time, they kept saying that, but they were giving strikes at the 26 area. That's a good place to short the put. The 28 area, 32 area, 35 area. And now here we are at, when they wrote this, at 42, and they're saying sell puts. That's crazy for me as a risk manager. But if you're a billionaire, maybe it's not crazy. But now they're also saying just buy it. They're not just saying sell put spreads, they're saying buy it. So I think this is a significant move for them. And, well, they were right about gold without being parabolic. I think they're right about silver. Moving on, related post, Goldfix PM. We had a good recap in that yesterday. At least we think it was good, it was thorough. Founders AM serious analysis of the Bitcoin question. That we're going to put a version of that out for premium over the weekend. This is about, is Bitcoin worthy of being a reserve asset at the sovereign level? So should central banks hold Bitcoin? Spoiler alert, this bank thinks it's not a bad idea to hold a little bit, confirming what we've been saying for years. Gold is a hedge for stocks. Bitcoin is a hedge for gold. Founders AM, big bank weighs in on Fed independence, adds 6,000 tail risk to gold. We'll discuss that a little bit in here. Ronnie Stouffer from In Gold We Trust, Incrementum. The big long, it's his keynote address at a mining event. Very good piece. It discusses the second half of the decade as drivers for gold. G7 may use price floors and hoarding to spur commodity demand. That's news. That's not an opinion. Silver hoarding has begun. That's opinion. RBC technical chart book says that gold is overbought, but that doesn't mean it's going to go down. It just means it's not going to go up, at least as much or as cleanly as it has. Moving on. All right, so alluding to that piece we just sent to the founders, we now believe that JP Morgan says we now believe that the target for gold is probably closer to 4,200, with the possibility as going as high as 6,000 by the end of 2029. So that's a ways off, right? And that's a social media post. The link is right there. Zero Hedge noted that, and we have an opinion. Everyone does, right? We think it's really interesting that JP Morgan is saying that anywhere, publicly or not. And we note that it comes right after Jefferies' Chris Wood says gold is to peak at 65.71. Now, one of the shortcomings of the Jefferies target was that he doesn't put a time frame on it. And he's just saying that's where it peaks. I don't know when it'll peak, but that's where it peaks. Now, JP Morgan is saying 6,000 by 2029. So ask yourself, as a trader, if you're trying to figure out who's closer to right, is Jefferies being optimistic or is JP Morgan being conservative? You have to figure that out. But I do believe these are indirectly related because gold's the place to be and people are putting money into it. and banks are now competing with each other while handling business for their clients. The chat has grown immeasurably. Next week, we're going to change the format just to make it a little bit more organized. We had left it continuous, just long for the whole week. But now we see that it is breaking into trying to answer questions, technical analysis, the big tent concept, technical analysis, options, miners, metals. We're going to try to create, figure out how to do this, a little sub chat section so I can pull questions and answer them more efficiently and drop insights by category as well. People have a preference. Not everybody is as uh, loose cannon as I am. All right, so data on deck. PCE is today. I'm not even sure what the data is, what the expectations are. Let me see. PCE is zero point 0.3 versus 0.2. That's what's expected. PCE year over year, 2.7 versus 2.6. Okay, so if you're trying to figure out how to how to gauge this when the number comes out, if the number is higher than 2.7, then that's a surprise strong, and that's bearish for gold and bearish for stocks. Normally, all things being equal, because uh, the Fed's less likely to ease. Now, that's still true, but in my opinion, the bigger, smarter money recognizes that we have thrown in the towel on inflation. We're just going to be happy to keep it under 4% going forward. So let's say you get 2.9% on PCE, and everyone says, that's inflation, the Fed's not going to cut. You know what? They might cut back on their cuts a little bit. They really might. On the other hand, if you think like macro discretionary does, they're like, there's no way they can cut back. They always choose inflation over deflation. They always choose inflation over recession. They're doing it again. And therefore, if inflation comes in hot, PCE comes in hot, you could, I'm not married to it, you could see stocks and gold dip, boom, as you would expect. And then as the rest of the day goes on, you could see gold rally and stocks should rally. I'm not sure. But the key is if PCE comes in hot, you're supposed to see silver take it harder than gold. And yesterday that didn't happen with the dollar strong. Yesterday, silver rallied more than gold with the dollar strong. So macroeconomic drivers, domestic data is becoming an excuse to buy, not a reason to sell. It's the opposite of the 90s. It's the opposite of Goldilocks. All right. Margin raises. I want to discuss margin raises for a second. Bob Coleman was first to point out that CME raised margins for gold and silver. And I'll give you a little history, a little bit of how this works. When I was on the floor, it would leak afternoon that margins were going to go up. And we only knew because the brokers who talked to the bullion banks knew. And the broker would say, Vince, they're going to raise margins, as a courtesy. And I'd say, are you sure? And I'd never believe him because I was like, he's a broker. What does he know? But they knew everything. I'm like, are you sure? And it's like, watch, right? And sure enough, the market was rallying as this was happening. And I would say to them, well, it's rallying. If you're leaking this information, we should sell off. And the broker would say to me, no, that's not how it works. Tomorrow we sell off. So invariably what happens is the margin raise information has to be released before the end of the close carefully to bullion banks that have operations in Europe. That's a courtesy. And I don't think that's a bad idea. And eventually it comes its way out to here, and then the letter goes out after the close. So what happens when there's a margin raise, and this is going to hurt some people's feelings that think the bullion banks are out to get them. Margin raises are used to cap a volatile market. They do serve that purpose. The way they serve that purpose is by punishing over-leveraged players that aren't making money. So when you raise margins, it's like doubling the blinds in poker. It's like doubling the blinds in poker. You have to pony up more money to stay in the game. Now, am I going to fold when they double the blinds when I'm up 20%? on my bankroll, or am I going to fold when they double the blinds when I'm down 20% in my bankroll? The shorts are covering first because of the margin raise. The weak shorts, not all shorts, the weak shorts. And then the weaker longs sell. So to give you a little history of this, back in the day, if there were any undercapitalized shorts, which all of them are undercapitalized except for the banks, the market would rally and the shorts would cover, and then the news would come out publicly, and then the market would go like this, whoosh, and wash out. Because now all the shorts are in the strongest hands possible. The blinds have been doubled, the blinds have been raised, right? And the only short player in the market is the bullion bank. And who has more money than the bullion banks? They borrow at 0%. You borrow off your credit card, your Citibank credit card at 25%. They have deeper pockets, and the full and the long start to capitulate. Some take profits, some aren't, some bought it too high and are out of the money, and the market starts to cascade lower. What's different now, what we think is different now, is that the shorts covered viciously. There's a lot of news in the market, but this was part of it. The shorts covered viciously. Oh shit, I'm down $10,000 and my margin's going to go up tomorrow. The heck with it. I'll take my money out of here and buy the dip in Bitcoin. That's what a commodity fund will do. And the longs, probably, some of the smart longs were probably taking profits. So today, you have every right to expect silver lower. If silver finishes up higher today, not only does that mean there's more shorts in the market, it means that the banks aren't playing short anymore. Anyway, I don't think that's going to happen, but you can see what I'm talking about here. Silver's lower. If silver's lower by 7 cents and not 700 cents, you like that. Okay, I'm Vince. Technically speaking, the market held those levels I talked about in the recap 2 days ago, the 4-hour chart in silver, the 4-hour chart in gold, those long wicks. So the DeMark indicator held, my DeMark indicator held. But you never know. You never know. That's it. It's Friday. We have a lot coming up over the weekend. The Bitcoin development. And here, we'll self-promote. The Bitcoin development. We're going to write something up on the JP Morgan comment about 6,000 gold. Anything else that's worth your time. I'm Vince. Have a great day.
Well, thank you, Vincent. And thank you to everyone who has been watching at home all week. Sure do appreciate you being a part of this community that we have here. And great to have our leader, Vince, giving us the gold and silver every morning, especially during what are certainly some chaotic times in the world. Although fortunately, at least in terms of the monetary changes that seems like we're not waiting for one day anymore, but we're in the midst of now. Great to have Vince sharing his insight every day. I sure learn a lot. I am grateful, and I hope you had fun watching the coverage this week. And before you wrap up, just would like to mention that this is all made possible by our kind sponsors, of which Fortuna Mining is one. Been a great year for Fortuna as their stock price has soared past where it was when it got shorted following their last earnings and at new highs of the year. Of course, I understand, especially in the mining world and in the stock world, investors always want to know what is coming next. And that's one of the really nice features of their Seguela mine they built, where I did actually take a trip there a couple of years ago, and you've heard Jorge talk about it. If you've heard any of those quarterly calls he does, where they have more targets in their pipeline there that will keep them busy for long enough. They also have a construction decision coming up on Diamba Sud, and they have invested $19 million into a generative exploration program across Cote d'Ivoire, Mexico, and Argentina. And one of the things that Fortuna mentioned in their last earnings was that they do have over $500 million in their liquidity position right now, which really gives them the opportunity to be selective about good opportunities, as well as what they are developing on their own. And for a brief recap of what they are doing with that $19 million exploration program, well, just click on the video that's coming your way now.